What's happening, everyone? This is the updated MA video that I've been promising to do for a while. So the last one I did was probably about a year ago, and if you've watched it, you'll probably notice that the gist of it was the 7 MA coming up through the 99 was the most volatile. Now over the course of the year that's actually changed. So what you'll notice now is the 7 MA coming up through the 25. So let's just call that obviously the yellow and the blue and the pink as they are the default colours for Binance and Binance app. I'm not too sure about the website, but on Android the Binance app is 7 yellow, blue 25, pink is the 99. So I've noticed over the course of the year that the change was between the 7 and the 25. So that then changes how I sort of go into the trades and what I look for. So I'm just going to run through. I'm only going to do Tron and Bitcoin because there's just two examples. I mean, you can see from the screenshots that I post that they happen all day, every day, and there's no one coin that it happens to most. It's literally every single day. It's just a case of whether you can spot them in time. So this is the 4-hour chart on Tron. Now, people ask me, you know, how do you avoid getting chopped up? This is Chop. This is Chop City. So this is ranging. So what have we got here? We have got a range of, 5%. So scalping, if I was scalping, that'd be brilliant, but I wouldn't be using the MAs if I was scalping. I just usually scalp through the order book, as you probably know, because I've done a video on that before. So if you look here, I avoid any action when the MAs are pinching. So what do I mean by that? I mean, because the sideways action and the MAs are lagging, the 7 and the 25 will, in sideways action at least, will peg price. So they're not going to tell me anything that I want to know. So you'll see this. I mean, they literally pinch within 2 sats of each other, and then we get the breakout. So you want to target coins where they have a minimum of 2 to 3% spread. And what I mean by that is something like this, because that gives you a general idea of if price breaks up. And exactly what happens here, I didn't even know that actually did that. This price comes through, comes sideways, little bear trap, and then comes up. But this is why I avoid up crosses, which we know are bullish. But when you've got the 99 MA, which usually works as a resistance level, because I'm almost certain all the algo and all the bots, etc. on Binance are programmed to trade the MAs, and that's why I make it one of my leading trading setups, is because there's so many bots trading on Binance, and if you can't beat them, you should join them. And that's what I did pretty early on, try to work out what they're doing and just try and pick up the crumbs from them. So this is what you want to try and avoid. So if you're buying stuff based on the MA, buying coins based on the MA upcross, as I said, which is bullish, you've only got a 2.8% price rise before you're starting to hit the 99 MA, and this is on the 4-hour, which is usually pretty good. And you can see, look, price comes up and tests it again, and then you get the down cross. And likewise for the bears out there, the down cross with the 99 above, you usually get this nice push down, which again bots sell off, and that's where you can go short. What we got here on that second touch, you got a 10.83% drop. So that's why you should really avoid when they're pinching, and this is exactly that sort of situation here. So what we're looking for is the spread. So price comes down, you get the up cross again, but exactly like the example I just showed you, the 99 MA is practically, what's that, 2%? Yeah, 2.3% above. So if you're trading the MAs, you're literally buying into resistance there. 2% upside, and then price is what I call trapped in my group. I tell, if someone asks me what I think of this price, if I'm just looking at it quickly on the phone, I'll judge on the 1 hour, the 4 hour, where the MAs are and if price is trapped, i.e. it's not telling me what up or down, hence I have no edge, which is why I wouldn't enter. So what are we looking for? Price breaks out, forcing the MAs to create the spread we're looking for. Our trade can now start to be prepared. So prices broke out. We've got the up cross, which in turn was actually a double up cross. And price pumped. And what did we get there? We got a nice 14% run. Now, we don't FOMO here, and you'll see that that's a nice bounce off the 7 MA, which would actually be the 25 MA on the 1 hour, but I won't do that. I won't skip time frames because it will fuck this up. So what do? We want to target the 25 MA first retest or touch. This is usually the most volatile and provides the best, risk to reward possible, in my opinion. So say we take this long. You're never going to catch the top, but I've just drawn it to the top just to give you an idea of what was actually the potential which was there. So price comes down, taps that 25 MA, and we have got the 99 MA about, what was it, again, another, what was it? Yeah, 1.3% below the 25 MA. So if we entered here, where this blue circle is, you have got the easiest stop placement because you've got the 25 MA acting as support. So buyers stepped in. You've then got, if price rolled over, you've then got the 99 MA to obviously act as your extra life as such. If that then fails, you want to be out. You don't want to be fucking about and trying to see how far that goes. Because in my opinion, if you get two closes, one below the 25, one below the 99, you're going to be starting to test the 171 or the 169, which was the old daily support resistance from a few months ago. So stop placement was absolutely a no-brainer there. So our time to shine, you want to be setting your bids longs around the 25 MA on the very first touch, which we've marked. This is statistically the most volatile, which it is, and provides by far the best R&R possible, what I just covered. Note how close the 99 MA is, which will give you a very strong support level, i.e. stop placement is easy and the chances you stop out are minimised. Now, nothing's a dead cert in trading, of course it's not, otherwise we'd all be fucking billionaires, but if you're throwing your money in at these sort of setups, trust me when I say your account will grow a lot more than chasing anything else, i.e. Elliott waves or just trying to do it off the order book or watching shorts versus fucking longs ratios and all that sort of stuff. So we get it. Say we get in. That's our target, 9.68%. Potential upside 9.68% from the MA touch. Drawdown max of 2.15% gives a decent 4.5R trade opportunity here. Now, notice I say opportunity because you'll never catch the top, but you certainly would have caught the bottom here, and I mean the nut bottom. You couldn't have got it any better. To the sat was 185. So let's drag in 2 seconds. Let's drag in Bitcoin. Let me just squeeze that up because that fucking drives me mad. Right, so as I covered just now, for all the bears out there, you'll be pleased to know, ignore that spelling mistake, it works exactly the same for shorting. Notice the reaction to the 25 MA after the down cross. This is where you want to, sell if you're holding spot to buy back lower, or you obviously shorters, no different to the long theory if you inverse the chart. So we get the breakdown, we get the spread, price comes back up, and this is the point where you could short the first 25 MA touch. What else are we gonna so here's the example. So what I talked about with the Tron trade, when price comes down, if the 25 MA fails and you've got that 99 MA just tucked behind it, you've you know, almost got that extra life. So an example of the Tron setup here, notice how that 99 MA acts as a secondary support level should the 25 roll over. This is the sort of trades that I look for, as it's almost being given an extra life in terms of stop placement. And exactly what we just showed you on, I just showed you on Tron. Price failed, dropped down, 99 stepped in, and again, and then it was off and running. This is where we had that chop. So this is where a couple of people messaged me on Twitter and just said, you know, how do you, I'm getting chopped up in this part here. And that's because they're entering trades that I wouldn't. So that's, you know, you can't, I don't enter every single trade based on the MAs. Of course, there's lots of other strategies that I use. But in terms of using the MAs, if you are going to, this is what you want to avoid. This is Chop City, and it's just coin flipping. You could argue, you know, that you could have brought in anywhere here with a stop under this 99, which in hindsight would have worked. But again, there's no edge there. You're just relying on the 99 to act as support. So again, like the Tron trade, price breaks out. That's where we get this spread. And we want to buy the first 25 MA touch. Now, unlike Tron, price actually carried on through, but did reverse. Now, that was, I mean, if you're going to be sensible and just say 2% stop or 3% stop, however you want to manage your risk, at the point where the 25 MA is, the max drawdown was less than 1%. So even those people with, I mean, I'm pretty risk adverse, so I'll do 1.5%, between that and 2.5% really on average. And this is because I'm buying areas like this. If this part failed and price did not come back up and break through quickly, then 9 times out of 10, which you would have seen me on Twitter calling, the 99 MA test gets done relatively quickly, and that is what, you know, 2.84% or 3%. So say we take the long on that 25 MA, we didn't get, you wouldn't have got stopped out because it's less than 1%. Even the most sort of tight stops, I've not seen anyone other than fucking times 100 leverage use anything like that. So price comes down, goes sideways, gets the up cross. Now this is an example of the up cross where it actually gives you a chance to come through and retest the 25. So let's get rid of this a second. 2 secs. Fuck's sake, move. Right, that's gone. So that was an upside of 6% eventually, but obviously that's in hindsight. You may have closed around here. You may have raised stops and, you know, and got stopped out or sold on the down cross. But in terms of entries, this was a decent entry, and sticking to the criteria of the trade, i.e. the MAs coming back after a breakout with the spread, the first 25 MA touch, you would have been fine, and you was never in danger apart from today, which obviously you would have raised stops anyway. So let me just neaten this up a little bit. So again, price breaks out from sideways, which we wouldn't entertain. But here's the first 25 MA test again. Absolutely minimal drawdown if you bought here. 0.15%. No one's ever setting a stop that low. And what do we get from that point? So there's 2 opportunities there where price was spread. The MA, was spread. And we entered on this first 25 MA test, never in danger. Then you would have had a second opportunity where price comes down sideways, creates that little bit of a spread, comes down and tests us there. You would then have had 4.71% potential. Again, potential because you're not going to catch the top. You may have sold there on these dojis, you know, indecision and then the sell-off. Notice here, just because obviously there is no foolproof, you know, nothing's 100%. if price comes down, gets the up cross, exactly the same as the last 2 times. But every single time it happens, this is why I say that the first is usually the most volatile. Not so much the case on this point, but that was the second time it did it, and the third time it did it, it completely rolled over. That was more, this isn't just normal price action. That was, a little bit out of the ordinary. So sometimes you're going to do that, and it is going to stop you out, which is fine. You may have stopped there because you would have used the 99 underneath. So 1.86%. When you compare that to the upside of both of these, you're still not a great example, but you're still up in terms of percentage upside to percentage of drawdown. I'll probably go into things in more detail when I've got a little bit more time, but I'm hoping that sort of explains a little bit more on the updated version of the MA theory, which I discovered about a year ago. So yeah, hopefully that helps, and good luck trading.